Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to today's Friday Fix. Yes, it is finally Friday. We have made it through the week. I hope everyone has had a profitable one. But if you haven't, it's Friday. It's the weekend coming up. Fuck it. You're here with myself and the amazing guys from AlphaPicks. If you don't already follow them, please do. Their content they put out on their Substack and etc. They're not just a blog. They are buy-side, sell-side research. That's a little in-joke there for someone that we know. Um, as usual,
We're everything. We're
as
whatever people need us to be.
yeah, this is it, right? This is it. This is it. But before we crack on, let me just 1 second. Let me just invite Jay to be a co-host. There we go. I will get the legals out the way, so nothing discussed on the space session constitute trading or investment advice or infers any kind of endorsement by PIQ or AlphaPix or me or Alex or Jay. Basically, as we say always, if you're making trading decisions based on four or three lads having a laugh and having a just having a chat on spaces, then you probably need your Red Sea into. But anyway, but we do give very insightful, valuable information. I won't, and also maybe put a smile on your face. I don't know. But anyway,
Mm.
Alex, Jay, how are you,
Mm.
my dear friends?
Not
Afternoon.
bad. Yeah, not bad this end. Unfortunately, I was beaten again in the Friday quiz by our mutual friend, Mr.
Oh,
Michael
really? Oh,
Brown.
were you?
Yeah, yeah,
Oh,
yeah.
right.
And the thing is, he obviously was out with you for a few scoops last
He
night. So
was.
you know, like he maybe had a slightly hazy head doing the quiz at 7:40
Ah,
this morning, and he
you
still
know,
beat me.
you know what? You need to remind me because next Thursday, right? Just for you, next Thursday, I'll get him shit faced, and then you've got a chance.
Yes. Yeah, thank you very much. Yeah,
I do
yeah.
it all for
It's
you. I do it all for
thank
you.
you. Ever the entertainer. Yeah, I mean, quite a week,
Yeah.
quite a week. A lot's going on, and yeah, a host of bits and bobs wanted to run through. I thought obviously we'd actually start off with the tremendous run that has all of a sudden resulted in US equities
Yeah.
from essentially having their strongest winning streak since March 22, 8 days on the trot, firing on all cylinders. And yeah, essentially, to quote another good friend of ours, maybe we're so back
Yeah, yeah, this is it, right?
on risk
Well, and
sentiment.
also it kind of came out and like it just feels like it's kind of snuck like this 8 day winning streak kind of feels like it's snuck up on us. It kind of it's like, oh right, we have had 8 days of upside. But to pat ourselves on the back, we don't do enough of that, and we really should. We did say last week that it kind of it's starting to feel like that period as we were kind of in the depths of COVID, where all the bad news was already known and out, and people started buying equities, knowing that we know that it's going to get better now, so we might as well get in now because if we wait until it is better, it's going to be 10% higher. And that
Mm,
seems to be what the kind of as you said last week or week before it might have even been. It feels like the bad news has already been front loaded. And yeah, that
mm.
seems to be the case. But don't get
Well,
me
I
wrong,
mean,
I don't think it's not going to be straight up. I think there's still some twists and turns. I see Tony listening. Funny enough, me and Tony were talking about this the other day. Like, it's not going to be a straight line. There's going to be more twists and turns to come. But yeah, I think it's positive overall, right?
Yeah, for sure. I mean, the S&P is actually up 11% since posting the 52-week lows. So it has been
Yeah.
a significant rebound. But on the contrast is that, we're talking about, an 8 day winning streak and double-digit percentage growth, which is great. But obviously, we zoom out slightly more, and April still was a terrible month for various assets. I mean, obviously, the one that stuck out to me was oil, which had its worst monthly performance
Yeah.
since I think it's 2021 or 2022.
And just
So
on that,
yeah,
just funny enough, you mentioned oil. Saudi Arabia kind of came out and said, if you are an oil bull, Saudi Arabia came out and said exactly what you don't want them to say, which was, we've spoken to our kind of stakeholders and we're prepared, we're safe at prolonged lower prices, which, that's not what you want to hear from Saudi Arabia. You want to hear them sweating because that probably means they're going to cut production to get the prices back up. But they seem happy enough with, well, not say happy enough. I can go a week without drinking. I'm not going to be happy about it, but they seem to be able to go some prolonged period of time, to quote them, with lower prices. So, maybe lower prices are here to stay.
Yeah, true on that front. And obviously, the other one that really stuck out to me, obviously, in the FX space was the dollar index. DXY had its worst monthly percentage loss since 2022, where it lost over 4%. And really, if you take out that one from 2022, it was actually the largest loss since 2010.
Eesh.
So it's like, yeah, yes, people look at the S&P as like a good barometer of risk sentiment from investors. But certainly when you look in other spaces, i.e. some commodities, FX, the damage has been done and, hasn't been undone. Let's put it that way.
Yeah.
As
Yeah,
we
that's fair.
enter May. So I think that's definitely one to keep on. And also, can we have a stat attack?
Oh yeah, go.
Do you know? Also, I feel like we need to get a little button or a little jingle for like a stat attack. Like Charlie Sloth does with the fire in the booth.
Hang on, there is a.
Some,
There you go.
there's some broken glass, Raymond.
I've been waiting
incredible.
to use that for a long time.
That is incredible. Stat attack, fantastic. So let me hit you with this one. It's not a question.
sorry. Right, go. Sorry, I am a child. I'm not. Yeah, I know. I really am 41 years old. Carry on. Sorry.
The S&P 500 posted its worst first 100-day performance under a new president since
this.
Richard Nixon's second term in 1973.
Oof, God, that
Not bad, eh?
that is a hell of a stat. But no, remember, as Trump said, this is Biden's stock market.
It's Biden's stock market. Yes, I know. And actually, that leads us on, while we're talking about placing blame on others, US GDP, which came out Wednesday, showed contraction for the US, 0.3%. And I know, obviously, this is Jan to March. So for some of it, Trump wasn't actually, inaugurated yet, even though, his rumblings were already afoot. And obviously, because it's Q1, doesn't actually include the Liberation Day, April 2nd onwards fiasco. But I would actually argue the fact that the US economy contracted in Q1, excluding all of the shenanigans of April,
right?
is really not a great sign.
I'm glad we're on the same page here. I am so glad
we're on the same page.
Yeah, I'm very much so. Because exactly that. Because my initial when I first saw it, I was like, oh, it's obviously just because the front loading of getting in front of tax. I'm like, hang on a second, that's not actually going to be under this bit of data.
Yeah. So I mean, obviously, some of it. There was obviously some, and in the data it showed some like stockpiling in anticipation of what could be announced.
But we know
obviously
there was a shit ton after this data was taken.
For sure, yeah.
Right?
And it caught a lot of people by surprise, the extent of what was announced at the start of April. So I think it is quite a worrying one. One of the I can't remember who it was from Trump's administration said it was the best negative print he'd ever seen.
You know what? I read that. I thought our dear friend Michael Brown reposted it, and I thought it was him trying to be funny. So I actually had to go and search and make sure that was actually what was said. And I can't believe he said it. It's the best negative GDP print we've ever had.
Yeah, I can't remember who said it, but yeah, absolutely bananas. I think he was referring to.
Was it Navarro?
Yes, you're right, Jay. Yeah, it was Navarro. Yeah.
Okay. Yeah.
It did. It kind of did sow the seed though, because now I'm thinking, if I put in a bad performance, when I turn around to the miss, I go, that was the best worst shag you've ever had.
Yeah,
but about my personal life.
Yeah, he's untapped now.
Oh God.
So obviously that was all kicking off at the start of the end. We also got Trump wading back in on Powell, and I remember actually we flag up our wins, we flag up our losses on this.
Yeah,
space.
We're all about transparency.
We're all about transparency. And I remember last week we were talking about Trump basically reconciling with Powell and, saying he wasn't going to fire him, everything was okay. And, it was kind of like, okay, maybe we can just put that one to bed. But we couldn't because he came out again last Tuesday saying that he's not doing a good job. And to compound this, and interested to get both your thoughts on this, was Besant yesterday was chatting about how him and the president are using the 10-year yield as their barometer of like how things are going. And Besant's basically like the Fed should be cutting because when you look, at the short end of the curve, like the 2 year, the 2 years at 3.5% or whatever, that's above the Fed funds rate. The Fed should actually be, should be cutting. And that's the most direct I've seen Besant be on kind of implicitly putting some pressure on Powell and co. So I don't know what your thoughts are. If it's a strategy shift, if it's more like do like that, or what do you think?
Personally, I can, as usual, I'm very much kind of following what you're saying. But personally, I'm hesitant to put too much into that because I do feel like it's just, because of what was happening with the stock market and stuff like that. I do feel like it was a bit of a bit of a deflection. And the thing is, as well, like we've known from the start, I think actually Trump kind of alluded to very early on in the presidency that it was going to be yield rather than stock performance, which was going to be their focus. Potentially now looking back in hindsight, because he knew what was coming. But yeah, I think I do just think it's just like mouth service or lip service. Sorry, to be honest, I'm not trying to read too much into it. I think Powell knows that he's safe. I think if they start buckling, I think the worst thing the Fed can do at the moment is start to even entertain any of this language that's coming out of the Oval Office. Because if it's the moment they do, the shit's going to hit the fan. Let's be honest, one of the only things that's I believe the only thing that really kind of lent on Trump to kind of pull back on his anti-power rhetoric was the fact that the market likes power and likes the stability. Now, if Powell and the Fed start kind of maneuvering, if they did do that, then the market's going to like fall out of love with them, and then that could be the end of Powell. But I don't know.
You say rhetoric,
not
rhetoric.
Is that what you're picking up on, or everything else? And thanks, mate. Thanks, mate. Thanks. Mate. Well, do you know what? Okay, I'm glad our friend Cam is listening, because if Cam's giggling away, he's the world's worst at pronouncing things. But anyway, it's obviously spending too much time with him. But yeah, rhetoric. Sorry.
Rhetoric. No, that's right. You say it. Maybe I've got it wrong. Maybe I've got it wrong.
Poke it.
Yeah. I'm just saying. Next time you're live on Bloomberg, they'll I don't know.
You know what? Funny enough, I did one not so long ago. Got asked if I wanted to do something, and my genuine response was, "Is this going to be live?" They said yes, and I was like, "I'll be very honest. I find it very hard not to swear." And then the person I was talking to, who's an anchor on Bloomberg, was like, "Yeah, do you know what? I'm having known you for quite some time. I did think this might be an issue, so we put a pin in it purely because I can't control my language."
Well, fair play. Well, yeah. Well, I suppose then you don't have to worry about mispronunciations.
Exactly. I can pronounce fuck quite well.
Yeah. Universal. And then another interesting story, actually talking of Cam, in the crypto space, Jay put out a piece on Wednesday, really interesting one that got some attention on, 21 Capital and what they're doing there. Jay, I don't know if you wanted to give us the 30-second download.
Well, yeah, so the first big corporate bringing on Bitcoin was obviously last year in Sailor and Strategy.
Yeah.
But the big new addition to the company, which is kind of a purpose-built company for this strategy, is 21, which is just launched via a good old SPAC. So yeah, kind of another step in this corporate space, putting Bitcoin on the balance sheet. It will be interesting to follow. They're currently trading at 3 times premium to the net asset value.
What's that compared
Strategy's about? Yeah, Strategy's about 2 at the moment.
Right.
But Strategy has traded between 2 and 3, so that seems to be the range for these Bitcoin corporates, whatever you want to call them. But then the other thing was
go on. Sorry. No, go on. I'll wait.
I was just going to change point to just Bitcoin April performance. So you raise your point.
Yeah. So on this, I think this is me and Cam have spoken about this a couple of times. Me and you two have spoken about this in the past. Is like the offering that MicroStrategy had. It just didn't make sense. Like zero coupon, you're not getting a yield at it, and they're just using it to buy Bitcoin. It wasn't even a great way to have Bitcoin on your balance sheet. So remember, we've been saying for months, it just feels like a very bizarre play if that's what you're looking to do. And the interesting thing with 21 Capital is that it's been purpose built to really kind of enhance the ability to get Bitcoin on your balance sheet. I think there was Andre from Bitwise put out a really good table that compared the two, compared MicroStrategy to 21 Capital in terms of like how it offered, like, you know, the benefits of actually investing in it and how available that made Bitcoin onto the corporate balance sheets and stuff. And it's a completely different kettle of fish. It's, you know, it's so much better suited for that reason. So as we said, I think we might even mention last week, if I was Sailor, I'd be shitting myself right now, because why would you invest in MicroStrategy if you can invest in something like 21 Capital? I don't know.
Yeah, it's an interesting one because they're both going to mirror the performance of Bitcoin at a leveraged rate, and if 21 is more appealing to those that want Bitcoin exposure and you get a more efficient way of getting that exposure, there could be a
Yes.
trade in like shorting strategy and getting long
I see what you're
21
saying, yeah.
if strategy's actually got a worse strategy going on.
I see what you did there.
I tried not to. There wasn't another word that was coming to my mind. So, it's just an interesting dynamic in the space. Maybe a bit of an arb trade there.
That's not a bad shout, actually. Not a bad shout.
And then the other thing was just, Bitcoin April performance. Obviously, equities were round about flat. We spoke about the dollar having a bad month, but Bitcoin was actually even above gold's performance, which I felt like gold got a lot of headlines throughout the month. Every day it was like another new high, like gold's the safe haven, but Bitcoin's obviously
A bit of a, like we said,
higher beta, but returned
kind of like what
a
we were
better
saying just
performance.
now with the equities, right? It's almost like a little bit of a stealth rally.
Yeah. So it's an interesting one to follow Bitcoin, and maybe we see it as a slightly lower beta asset than it has been previously.
Whilst we're talking about April performance, Jay, just remind me, what was the AlphaPicks global portfolio return for April?
Oh, hello.
What we just over 9%.
Yeah, 9.1%. Oh!
Oh
We've
God,
got,
someone take my phone away from me. Oh, specifically, Jay.
I think,
Well, one of you two. What's the LNG basket doing?
It's up.
That's all I care
It's
about.
up.
All I care about.
I get you a little refresher.
Whilst Alex is bringing that up, I was going to say Alex should change his LinkedIn to put expert vol trader. I think he's been sat at the desk trading these big moves intraday off all of these headlines.
Mate, he's a machine. The boys.
Very well for the port.
For those that don't know, so obviously Jay put out a very good note on LNG about how, like, the big winner from tariffs. I did a couple of paragraphs. My writing debut for AlphaPicks, and thankfully, it's actually that our little basket that they put together is doing all right, and we're outperforming the S&P, right? Which is the main thing. Well, we were yesterday, the day before.
Yeah, we were
Outperforming the benchmark, lads. What more do you want?
It's called Alpha. Putting
the Alpha in AlphaPicks.
But the Alpha and AlphaPicks. No, it's good. And also, I think that I think there's more room to go. I mean, the one that actually caught my name within the basket, was Next 15. They basically jumped, I think it was 7% yesterday. I just wrote it because that's like the kind of, 250 mil market cap, like pretty rough and ready sort of LNG exposure. But yeah, they were flying yesterday, which was great. Wallop. So yeah, that's all groovy. And then the other thing, whilst talking back on equities, was Mag 7 earnings out this week. So we had the host of big tech, and really kind of a mixed bag. So Microsoft and Meta both killed it, and their stocks jumped, I think it's like 6-7% after market closed when they came out. Again, a lot of focus on AI. But if you remember, like, a couple of months ago, everyone was getting spooked out about how, everyone's spending tons on AI infrastructure, and actually, is the demand there? Is it overpriced? Blah, blah, blah. But Microsoft and Meta managed to pull off the fact that, like, we're good guys. Don't worry. But Apple and Amazon, from yesterday after market close, didn't manage to pull it off, and both of those stocks, when I last checked, were down about 3 to 4% ahead of market open. So it's interesting that there's a difference in there. Obviously, Apple's a bit of an anomaly because I would argue, like, of the Well, I don't know. I mean, of all of them, it has a lot more sort of hardware
Yes.
exposure
Yeah.
to
Good point.
China, obviously. And Tim Cook actually mentioned that they reckon for Q2 that they're going to have a $900 million hit from import tax.
Yeah.
And that's even with the slight reconciliations in some of the Asian countries aside from China. So that's pretty significant even for a company like Apple.
Yeah, absolutely.
Yeah, but yeah, interesting that basically, certainly for Microsoft and Meta, AI, people seem kind of happy that they're going to keep this tens of billions of dollars worth of AI infrastructure spending, and they're kind of okay that the payoff's going to be there, which I'm not as
Well,
convinced.
yeah.
But
Do you know? Because I'm mindful to remember you raising this a few weeks back, actually, probably potentially a month or so ago on one of our calls, where you were discussing about how at one stage we look back at the start of the year, anyone that any company that mentions they're spending on AI was worth a couple of percentage points in the stock price, and you raised the point that yeah, it's glamorous to say we're spending billions on this, billions on that, but is it worth the billions? Because it seems to be getting a lot cheaper the longer we wait. So I think it's more like quality over quantity, perhaps, and that seems to be the way it's going.
But interesting. Stat Attack, actually.
Oh,
Hang on.
hang on.
There we
Oh
go.
God, take my phone away from me, please.
Zuckerberg, a direct quote, he says, we're making good progress on AI glasses and Meta AI, which now has almost 1 billion monthly active users.
Oof.
Which, I don't know about you, I mean, I'm not using the
That sounds a bit
Meta
lumpy because I
Ray-Ban
don't.
AI glasses.
I don't know. Are you sure? 1 billion.
Yeah, 1 billion.
I'm
Yeah.
sorry, Mr.
So
Zuckerberg.
the
I'm
so
calling bullshit on that.
just on this, I saw that headline. And I saw a couple of people say, like, similar to what you're saying. How, like, I've never used it. How on earth are they getting 1 billion? But on WhatsApp, I don't know if you've seen, like, the Meta AI feature is like right in the middle of your keyboard, like whenever you try to use any group chat or something. So I wonder if that's like inflating the stats because they've just added a feature and no one has a clue what it is. They just click on it. And obviously, WhatsApp's a hugely used platform across Europe and, well, outside the US is one of the biggest messaging services. So I just wonder if that's like inflating the stats because it's new and everyone's just clicking on it.
Very
Yeah, no,
interesting.
yeah,
Good shout.
something doesn't sound right, does it? I don't know.
Yeah,
Yeah,
because I don't think people are going to be using it long term, but
it just
maybe just
feels a
the
bit.
initial
It feels
release.
a bit gimmicky. Yeah, maybe I'm just old.
Yeah,
But I don't know.
I mean, in fairness, that one, yeah, if it was something related to the WhatsApp in terms of their methodology in calculating the users, that would make a lot more sense because,
Yeah.
I don't know
yeah,
how else they get 1 billion people
No,
using
yeah,
yeah.
because I'm telling you
AI.
now, there are not 1 billion people using these fucking glasses. I don't think 1 billion people wear sunglasses. I don't know. Yeah, no, Jay, I make you right. I think that was very shrewd there. Good work, son. Good
Yeah,
work.
good work, good call. So sifting through the noise. That's
Yeah,
what we do on
this
this
is what we
podcast.
do. This is what we
Yeah.
do.
We provide actionable commentary that people can. There we go. Wow. Oh, yeesh.
Is that your
Anyway,
Ryan? Is that your bell for a drink at the Stafford?
Yeah, well, funny enough, that's where I'm sat. But yeah, anyway, moving on, moving on.
maybe moving on. I mean, the only last thing I wanted to talk about was obviously today, the upcoming non-farm payrolls.
Yes, indeed.
It is obviously first Friday of the month. So a fairly low benchmark, 130k is consensus for March. Unemployment rate meant to hold steady at 4.2. Average annual earnings meant to tick slightly higher, nothing too crazy. So yeah, but I think whereas we were talking pretty much a month ago, amidst all the craziness and saying, do you know what, the market's going to look past any print that comes out, which we were correct on.
Yeah.
Given the market has settled down now, I do think this is more of a report that will be paid attention to.
Yes. Yeah. No, I
And
agree.
so I think we're almost back to normal in terms of data dynamics.
Yeah.
So that is definitely something I'd say to watch out for, obviously next couple of hours
Yeah.
for the Friday session.
I think there's only one certainty with this number, is that if it's a bad number, it'd be Biden's number. If it's a good number, it'd be Trump's number.
Yes, that is true. That is true. And also, given the rip higher, I'd also say that the risk is skewed again to the upside. That
Yeah.
if you get anything like a 150 plus print, like people are going to be a bonanza. It's going to be much more looking to buy.
That I make you right,
good
because I think
and then sell about.
I think you're right, because I think there'll be a lot of people out there that haven't bought this rally yet, and they'll be like looking for a reason. And sorry, I'm just ordering a drink. There'll be a lot of people looking at this rally, like thinking, "Shit, we've missed this." They'll be looking for any excuse to get involved on it. So I think you're right. I think there'll be a lot of the cash on the side that's itching to get involved. All they need is a decent print, and then in we go.
Yeah,
I think
agreed.
just a quick point on employment. I was reading something from a Bloomberg article this morning that was bringing out that the May report may actually show more signs of concern in the labour market. So at the moment, money markets are pricing about 4 cuts for the year, which I think is probably still on the steeper side. But if next month the labour market begins to deteriorate, and inflation stays steady, then I think they will flip to focusing more on the labour side, like they did when they did that double cut in September. And I think, you might start to get we'll probably price higher on the rate cuts, but I think I'd much more sway towards the Fed leaning into cuts potentially in the next month.
I think you're right. I think the next print is always the most important print, right?
Agreed. Fine. I mean, that's basically it from me.
Awesome.
Loads we went through. Anyone got anything else to chat about?
I think, as usual, my dear friend, I think you've covered everything fantastically. Alex, Jay, thank you both so much. Again, I stress it all the time. If you don't already follow them, what are you doing? If you don't already subscribe to their Substacks, what are you doing? Get that corrected. Do follow them. Do subscribe to Substack. If you are trading today, keep it tight. Whatever you do at the weekend, stay safe, and we'll see you next week. Have a good one.
Pleasure. Thanks, guys.